Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Markets are little changed following another second straight record close above 50,000 for the Dow Jones Industrial Average. Each of the major averages finished Monday in the green, buoyed by a tech rally that included NYSE-listed Oracle, which popped more than 9.5% during yesterday's session. Investors will be paying close attention to fresh economic data arriving in the coming days. The delayed January jobs report is due on Wednesday ahead of market open, and that's closely followed by the delayed January CPI report on Friday. And earnings are also in focus. NYSE-listed industry giants Coca-Cola and CVS reported early this morning, and NYSE-listed Ford will report today following market close. Here's what else is on tap this hour. The National Federation of Independent Business, or NFIB for short, released the latest glimpse into small business landscape this morning. Find out how optimistic business owners are and what they're concerned about most. Meanwhile, Resolve AI has reached unicorn status following its latest round of funding. Its CEO will join us to break down the problems it's solving and how it's going to allocate the fresh funding to do so. And at 9:30 Eastern, Boyd Group Services will ring the opening bell to celebrate its recent listing here at the NYSE. The company says it's one of the largest operators of non-franchised collision repair centers in North America, with over 1,300 locations. But we begin with the markets, as we often do here on NYSE Live. Joining me now is Kenny Polcari. He's partner and chief market strategist at Slate Stone Wealth. Kenny, welcome.
Thank you for having me. It's always a pleasure to come home again.
Of course. So happy to have you back. So markets open in about 30 minutes. What are you going to be taking a look at most closely?
So I think this morning you got to look at the retail sales number that just came out. It was a bit weaker than expected, the December number. But you have to remember that the November number was much stronger than expected, as I think a lot of shoppers and consumers went out and bought a lot of holiday gifts earlier in the season when there were lots of sales going on and all that. So the December number is not really that concerning to me. I think we've been talking about the consumer feeling a little bit stretched and trying to be very careful where they have their spending. So I'm not necessarily so concerned. The market futures turned a little bit south on the back of that news, but I'm really more curious about what happens tomorrow with the non-farm payroll report and Friday with the CPI report.
What do you think will happen with the jobs report and the CPI data?
So I think it's going to come in as expected. I think the NFP report is going to come in with, I think they're looking for plus 68,000 jobs created. What's important is going to be wages and unemployment. Are they going to remain, are wages going to continue to grow, and is unemployment going to remain at 4.4%, which it is expected to do, which signals, full employment. So there, it would suggest that the labor market is not at all suffering or collapsing or weakening at all. And on the CPI, I'm looking for the number to improve, which means they're going to be a little bit softer than the expectation. I think year over year, they're looking for plus 2.7%, which would be down from plus 2.9. That's a very big positive in terms of inflation. I don't see how anybody can complain about that.
Do you think the Fed is going to weigh this data that's coming out for their next rate cut decision?
I think they'll always weigh the data because they're data dependent. I don't think, though, that we're going to get a rate cut in March. Now, I'll be corrected if the NFP report is suddenly a disaster, and if CPI is a disaster, then I'll say, okay, maybe there's going to be a change here. But since I don't expect that to happen, I don't think you're going to see a rate cut in March. Again, I don't think you're going to see a rate cut until the summertime. And in fact, markets are not projecting a rate cut until July.
All right, and earnings season is also upon us.
It is. We're right in we're almost towards the end of it. It has been a very good earnings season. We got some Coca-Cola this morning. We got CVS this morning. I think Coke was a little bit cautious in their guidance, so it's causing a little bit of consternation there. But CVS, I think, gave a very strong report. So once again, I think it just adds to kind of where we are. The season has been strong. I think we got about 78% of the companies that reported beat on both the top and bottom line. They projected strong guidance going forward. That's right in line with history, kind of historical standards where it's been. So I'm very pleased with where we are so far in the earnings season.
All right. We've seen a majority of the Mag 7 companies report 6 out of 7. What do you think their reports say about AI and the future of AI?
So, look, I think the AI story is a complicated story. I still think we're very much in the early innings of AI. So I think, last year when they were all talking about spending all this money on AI, investors couldn't wait. They thought it was great. They went out and bought them. This year, suddenly they say we're spending even more money on AI, and suddenly there's all this nervousness, which I think is a little bit overblown. And I think that's obvious from yesterday. You saw what Google did. They just had a bond offering, 3, 5, 10s, and 40-year bonds. They were expecting to raise $15 billion. There was an oversubscription, $100 billion worth of money wanted to get into that bond market. So they raised it from 15 to 20, which suggests to me that there's plenty of money out there willing to be invested in AI companies that are developing, in these companies that are developing these AI models. So I'm not really worried about it. That doesn't mean that there aren't some names that are stretched. There are, but I don't think we're anywhere in this, people want to say we're in this dot-com bubble. I don't think we're anywhere like that at all. But do I think that some names are stretched? Sure, and they'll get corrected. And we saw some of that correction happen last week. And so those names are going to start to digest what happened last week and the explosive rally since, and then kind of settle in.
And how do you think investors should be approaching assets like precious metals and crypto?
So I think you have to be careful and you have to understand who you are when you talk. Let's talk about crypto first. You have to think about who you are, and what your time frame is, and what you really think. Right now, I own some crypto, Bitcoin. I don't own a lot. If it crashes to zero, it's not going to kill me, but yet I'm in it enough so I can kind of feel that game, right? Am I comfortable with where it is? Not really. It's down from 125, although my cost basis is lower, so I'm still okay with it. But I think you have to be careful in terms of how much you put into it, what your time frame is, and what your really risk category is. On gold and silver, for instance, look, gold is always a safety play, no matter what happens. Do I think gold has gone parabolic and it's a little bit stretched? I do. But you got a lot of central bank buying. You got China, you got India, you got Brazil as they try to, create their new reserve currency, which is always a little bit concerning. But I think gold just tells you that that not only you have that, but I think you had some momentum players that were nervous about what's happening in this country, and so they went to gold. I always like gold. I think gold should be a part of your portfolio, but I don't think you should be chasing it. The same way I don't think you should be chasing names that are extended.
And what advice are you giving to investors as they navigate the volatility and headwinds?
So it's the same thing. Look, I'm a wealth manager, so I talk to investors all day, but I talk to long-term investors, right? We plan for the long term. We're not planning for next week or next month. We take a long-term view. So, as always, I think you have to be in it because it's time in the market. Look, we just saw the Dow pierce 50,000. When I came here in 1980, the Dow was trading at 792. That's a 6,200% increase in the Dow. Think about all the compounding that has been. If you had money and invested in 1982, where you would be today. I think that speaks directly to kind of having the long-term plan, being disciplined, and staying in the market and not trying to trade the market.
All right, and any sectors that are interesting to you right now?
So I think it's going to be a value play this year, more than growth. I think growth will do fine, but I think value is going to outperform, and you're already starting to see that, right? We're seeing industrials just blast away. Energy, consumer staples, one of the most boring sectors in the whole economy, is now one of the leaders. It was an underperformer last year. It's one of the leaders today. And I think that speaks to kind of this change in mood about where investors are looking to put money into value. And you can see it as the rotation comes out of some tech, not all of it, but the people are taking money out of tech and redeploying it. It's not like they're taking it out and just putting it in the bank. They're finding other places in the market, and I think the defensive play, the value play, is going to be where they find that.
All right, Kenny Polcari, partner and chief market strategist at Slate Stone Wealth. Thank you so much for joining us at the New York Stock Exchange. Coming up, we take a close look at the state of small business and how optimistic owners are at the start of 2026. We're going to have more details next.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. Earlier this morning, the NFIB released its Small Business Optimism Index for the month of January. According to the data, optimism remains above its 52-year average, despite a small pullback in January. Joining me now is Peter Hansen. He is the Director of Research and Policy Analysis for the NFIB. Welcome.
Thank you so much for having me here.
So what should investors be taking away from this report?
It's really a quiet report, especially when you look at that top line optimism index, 99.3 after 99.5 last month. That's essentially flat. We're still just a little bit over a point above the long-term average, which is telling us that the economy, at least for small businesses, is healthy. It's not super strong. We'd love to be farther above our long-term average than just that 1.5 point range where we're in. But what they're telling us is that they're feeling decent to start the year.
All right, and where do you see optimism rising the most and the least with small business owners?
So our optimism index is a kind of composite of 10 different components, and 9 out of 10 of these were really quiet. In fact, 7 of them just like slightly ticked downwards. 2 of them ticked upwards just a little bit. The one change is actually a category that I really like seeing a positive movement in. That's sales expectations. That moved up 6 points. Now counterbalanced by the fact that that 7 out of 10 categories ticked down really slightly. But that's one key area within the index that moved up a lot, that sales expectations for the next 3 months. A nice positive note within the kind of overall flat optimism index.
In January, 18% of small business owners reported taxes as their single most important problem. What is the signal for other, perhaps less consistent issues?
Right. For me, when I see taxes at the top of the list, I think the right takeaway is that the other issues are actually in pretty good shape. So for a lot of the last 5 years, we were talking about inflation, we were talking about labor quality, the fact that taxes super consistent, you're paying very similar rates year to year, even as maybe some of your own earnings liabilities, earnings change your liabilities. So with taxes now above those in this month and last month, that's telling you that these issues are not entirely in the background. Labor quality still 16%. Inflation still a bit of a thorn in the side of small businesses. But it's good news. And I would add another one in there. Poor sales is the biggest concern within all, I think, of the list of issues. You really don't want that kind of recession indicator, poor sales. So that's another example of an inconsistent issue that we'd love seeing farther down the list. Taxes being at the top of the list, it's really not overall bad news, because we know what that's telling us is some of the less consistent issues that have been huge issues are really not huge issues right now, even if they still are a problem.
And Peter, how do you gather this data?
So each month we reach out to a sample of our 300,000 small business members all across the country, comprehensive survey that we give them to try to collect as high quality data on this super important slice of the economy. Actually, small businesses aren't singled out in a lot of government data, so there's not a lot of ways for us, for policymakers, for investors to really understand what's happening with this slice. So we kind of do our best to represent them through this really high quality survey that we run throughout the month to give this data.
And based on the data, do you expect small business optimism to climb or slip over the next several months?
So one little, I'd say, slightly disappointing detail in the report was that our uncertainty index, kind of saying like people who don't know which direction the needle is pointing, ticked up in January. And that's really telling us that it's hard to say which way the needle is pointing. 2025 was a historically high year. December was the lowest point, and then we ticked back up with January. So I think there's a lot riding on certain policy decisions. Can we have certainty going forward? If things are really stable, I think you can expect good positive movement on optimism. If there's more kind of disruption with the market, more reasons for businesses to think, I don't know what's going on, I feel uncomfortable planning, then you might be worried about the needle pointing the other direction. I feel optimistic, but it's such an important factor that businesses need to have confidence before we start to see that optimism increase from where it is right now.
All right, thanks, Peter Hansen, Director of Research and Policy Analysis for the NFIB.
Thank you.
Coming up, as Resolve AI reaches unicorn status, its CEO will tell me how it plans to deploy over $100 million in fresh capital. Stay tuned.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Earlier this month, Resolve AI, which says it's AI for running and operating software, announced that it's reached unicorn status, a valuation of at least $1 billion, after securing a $125 million Series A round of funding. Joining me now is Spiro Xanthos, Resolve's AI co-founder and CEO. Welcome.
Hello, thanks for having me.
How do you plan to allocate the $125 million in fresh capital?
So maybe let me start by sharing what Resolve AI does. So we are building agents and models that can help run software. So the world basically runs on software. For any business that delivers, their services through software, the most important aspect is delivering that reliably, right? So our customers have access, revenue is not impacted. And in our experience, the vast majority of engineering work, the work software engineers have to do, is actually not building new applications, new features, but actually, focusing on delivering the application reliably. Something like 70% of their time is spent on that. And up until now, we didn't have the technology to do that better. Resolve AI essentially is building AI that can automate a lot of that work so that we can improve, let's say, velocity, and we can give engineers more time to get back to building. So we see this, solution is applicable to really anybody who delivers, like I said, their business with software. So our goal is to use the fresh funding to expand the technology, to go much deeper into building our own models and expanding like the agents that we have built to handle more and more cases, but also expand globally our go-to-market team so that we can support our customers in their use of the product.
And what does this milestone of reaching a $1 billion valuation signal about where enterprise AI is right now?
So I think that, it is, to me, AI is obviously changing the way we work. Software is probably where we have seen the most impact of AI so far in technology. We have seen this with a lot of the companies that built agents that generate code. And now I think we're moving to the next phase of that, which is not just building applications, but AI helps us run it so we can produce technology a lot faster. So to me, this is another sign that AI is real, is going to have a lot of impact to the enterprise, and is going to change how we work. And we see that a lot more now in software engineering and technology, but I think we're going to see it in the other areas of the enterprise.
And I understand you've said that how well companies run software in production defines how fast they can innovate. What do you think is broken about production operations? And can you also tell us what is software in production?
Yes. So basically, for any system, any application that we build, we have to run it somewhere. Think of it like it runs on the cloud, right, or on AWS or Azure, and that is what we call the production system, right? Like essentially the running software. And obviously, delivering that reliably, if our customers are using our application, is very, very important. The reason why this is hard is because any typical enterprise will have a very large scale of infrastructure and applications. And so far, that has been a very manual process. Let's say humans have to essentially use tens of tools, manage the infrastructure manually to deliver these applications. So with AI, what we're doing now is essentially we're making the agents be the operators of these tools. Also, the agents can now be, let's say, the glue across these tools and systems so they can oversee the running applications. And now humans can oversee those agents and move faster. And the reason this is critical is because now we have gotten to a point with AI where we can create code a lot more efficiently. We can generate a lot of code, maybe like 5-10 times as fast as we were able before. But until we also address running these applications in production a lot faster, we're not going to be able to move a lot faster. So this is paramount to the ability of enterprises to move more quickly with technology.
And in our last 30 seconds, how has that rise of this AI-generated code impacted the production problem?
Yeah, essentially, like I said, so far people spend probably the majority, engineers spend maybe 70-80% of the time running production systems. And now we have this avalanche of new code that is being created by AI. So unless we really address how we use AI, essentially we need more AI to run applications as well, as fast as we generate them. And that's the next frontier, I would say, in software.
All right, thank you, Spiros Xanthos, Resolve AI's co-founder and CEO, and congratulations.
Thank you.
In other news this week on the Inside the Ice House podcast, our very own Lance Glynn sat down with Jay Jackson. He's chairman and CEO of Abacus Global Management. As the pioneering alternative asset manager celebrates the company's listings transfer to the NYSE, which took place at the very end of 2025, Jackson dove into the company's transformation and how the New York Stock Exchange will help Abacus take its next steps.
We aggregate and acquire these insurance contracts, put them in tranches, and we'd either resell them back to the insurance company or even back to large institutional investors that we all know. Some of these investors listed right here on the New York Stock Exchange are our clients. I think the big transformation for us was a lot of people thought we were a life insurance business. We're not. We don't issue life insurance, right? We are the actual group that helps originate, create wealth, and now we are an alternative asset manager. So when you think about ABL or Abacus Life, to remove that connotation where people think, oh, this is a life insurance business, when we're not, we're an investment business. And then it was natural to then say, well, Abacus Global Management, we have a global presence, we run offshore capital, and then changing the symbol to ABX was just a better reflection of our actual business.
Later in the conversation, Jackson spoke about how Abacus brings together all its verticals and unites them to create better products and services for their customers. Take a listen.
Most policies never pay because people just let them go. Sure. They serve their purpose. We come in and say, wait a minute, it's got a current value, just like your home. It's a true asset. And then we just paid that client and we pay out $200+ million per year to people all across the United States. So nearly $250 million we pay out. Why wouldn't we offer them financial solutions? Yeah. Well, what's the key to that financial solutions? Like, think about our 4 verticals. All of them are work together, right? Our technology, our asset management, we're going into personal wealth. What is the tech, by the way? And we can, this will tie into other things, but the data we have, think about that. Health data, lifespan data, mortality data, it's the kind of things that Google would be blushing over. Sure. How do I get that? We're applying that to financial services. No one's done that before.
Thank you to Jay Jackson, Chairman and CEO of Abacus Global Management, and of course, Lance Glynn, for that interview. You can tune in each week for new episodes of the Inside the Ice House podcast. You can watch and listen wherever you get your podcast. You can also access them by scanning the QR code on your screen. And don't go anywhere. The opening bell is up next.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, Boyd Group Services will ring the opening bell to celebrate its recent NYSE listing. The firm, which officially began trading on the exchange this past October, says that it's one of the largest operators of non-franchise collision repair centers in North America, with over 1,300 locations in 37 U.S. states and 6 Canadian provinces. Boyd is also a retail auto glass operator with a presence in 39 U.S. states and a third-party claims administrator offering glass, emergency roadside, and first notice of loss services. Let's see them ring the bell. You just saw Boyd's CEO and President Brian Kaner do the honors on the podium to celebrate their recent New York Stock Exchange listing. An exciting morning for Boyd Group, and stocks are officially open for trade. Joining me now is Jason Katz, Senior Portfolio Manager and Private Wealth Advisor at NYSE listed UBS. Good morning.
Good morning.
So what will you be watching most closely as trading gets underway?
You know, last week, all the talk was this is something ominous. And in fact, it was the beginning of a great recalibration. So what we're looking for is for stocks really to find their footing. With $6 trillion on the sidelines, there's still a lot of FOMO, fear of missing out. And so we're looking for buyers to step in and find really a recalibrated market in terms of should we be piling into AI or should we be broadening out? You know, last week, it was all about AI is going to eat the world or it's going to flop. And both can't be true at the same time. So we're looking for a market really to find its footing.
All right. And the Dow has closed above 50,000 for 2 straight sessions. What do you think is driving the recent gains across the major averages?
Well, for the last 3 years, we've had such narrow tech leadership in terms of earnings and stock performance. It's pushed everyone into a narrow universe of stocks. Now earnings are broadening out and capital is redistributing. So the divergence in performance is good. It highlights the need for diversification. It's that diversification in areas like materials, which are up 8%, or industrials up 10%, or energy that's up 20%. That's allowing the more cyclical parts of the market and indices such as the Dow to ascend above 50,000.
All right, and we are in the heart of earnings season with 6 of the 7 Mag 7 companies reporting in just the past 2 weeks. What are you taking away from the data so far?
Well, 76 some odd percent have beat expectations, albeit at a narrower margin than last quarter or last year at this time. But the top line is exceeding higher than it was last year at this time. So what we're gleaning from that data is that companies continue to do more with less, not only from leveraging AI, but leveraging the technology they invested in over the last 20 years. So I think investors continue to underestimate the resilience, not only of the consumer, but of corporate America.
All right, and speaking, of course, of data, January jobs and inflation data are due this week. How are you pricing in expectations?
Well, I continue to expect jobs to modestly decline, 1, because of immigration policy, and 2, because of leveraging AI. And it's a very strange environment when you have GDP last quarter growing out of over 5%. You have earnings beating expectations, but you see a deteriorating job market. So I think you're going to continue to see a little bit of that deterioration, but the Fed in the not too distant future will be stepping in and cutting rates, in our view, at least 50 basis points by the end of the year, which should be supportive of labor markets and the economy.
All right, and I understand that you feel that the everyday consumer is about to, quote, take the driver's seat. What do you mean by this?
Well, I wouldn't count the consumer out. This administration's been about vegetables before dessert. And last year, the vegetables were the tariffs and the dessert was the one big, beautiful bill. This year, the broccoli's been geopolitics. And I think the dessert and the pudding will be deregulation, rate cuts, and really an inward focus on affordability. So the high-end consumer has thrived. Now the everyday consumer is going to benefit from tax refunds, the administration's focus on affordability, especially with housing. And then at the end of the day, they look at their 401ks, the everyday investor, and they're seeing this wealth effect. So I think the everyday consumer and the everyday average Joe stocks that are cyclical both benefit in this environment.
All right, and how are you advising your clients when it comes to navigating the current state of the markets in our last minute together?
Well, as somebody that's been doing this north of 30 years and counsels individual investors, always rely on a thoughtful financial plan, always be asset allocated, be diversified. Don't just focus on the school of what's worked. You have to spread your risk out. Expect rate cuts, expect an economy that's supportive, expect a cyclically led equity rally and a reprieve in some of the higher growthier tech names.
All right, thank you, Jason Katz, Senior Portfolio Manager and Private Wealth Advisor at UBS.
Thank you.
Still to come, Brookmont Capital Management says its catastrophic bond ETF minimizes the impact of any single disaster on the fund's overall performance. Its CEO will join us to elaborate. Meanwhile, deep tech company WSense just announced a new partnership with plans to develop wireless technologies for underwater applications. I sat down with their CEO to learn more. Plus, the CEO behind Romanian-based app Bible Chat says the platform is designed to help people find direction when they're going through tough times. He told me how users can best take advantage of the app. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. The Brookmont Catastrophic Bond ETF, which trades on NYSE ARCA under the ticker symbol ILS, aims to minimize the impact of a natural disaster for investors while also providing daily trading flexibility. Joining me now is Ethan Powell, Principal and CIO at Brookmont Capital Management. Ethan, welcome.
Ashley, thanks for having me.
So before we dive into the stats, what are cat bonds and why are they important?
Well, other than having a terrible asset class name of catastrophic bonds, they're actually a super fascinating alternative income asset class. We're talking low double-digit floating rate yields. And most importantly, the risk you're assuming has nothing to do with credit risk and everything to do with large-scale catastrophic events. So you can imagine the diversification benefits of a asset class like that to an otherwise diversified portfolio is tremendous.
All right, we understand that 2025 was a record year for cat bonds with more than $25 billion in new issuance and over $60 billion outstanding. What drove that demand?
Well, I think your viewers are probably familiar with what's called the insurance gap, right? Which it's about $250 billion globally of damages that aren't insured. And what we see increasingly is that insurers are leaving specific geographies or writing out perils from their insurance agreements, leaving people, particularly in high peril areas, underinsured or self-insured. And so what we see is even states have become very large issuers of these catastrophic bonds. You've got Florida issuing hurricane bonds, Texas issuing wind and flood, California issuing fire. And what's really driving it is that insurance gap and this, being capital markets, we're traded on an exchange, price discovery is everything in some of these opaque markets. And then, bringing additional scale to the marketplace to help solve some of the property and casualty affordability issues. That's what this asset class is all about. That's what's driving its interest, and that's what's driving additional scale.
Is climate change having an impact on the cat bond market?
Yeah, it's really interesting. We like to talk about climate volatility because we don't want to get caught in the whole political element of climate change. But if you look at last year, we had no hurricanes making landfall in the United States. And yet we still have $100 billion of insured damages, mostly through secondary perils like the LA wildfires were about $40 billion. And then you had severe convective storms, which are, you can think tornadoes and wind and flooding and hail creating damages, but not in the same sort of concentrated manner that a hurricane hitting a highly populated city in Florida might.
All right, and I just want to go to the screen for a minute. We are seeing our bell ringers ring the first trade bell. And we're going to go back into the interview. Apologies. So what separates cat bonds from yields?
They're a floating rate instrument, right? So they are typically tied to SOFR, and that's the base rate, and it's actually updated to every quarter to the prevailing risk-free rate, right? So unlike a traditional fixed income instrument that might have a 10, 20, 30-year time horizon, creating a lot of duration risk, here it's floating rate. So you don't really have to worry about whether or not the Fed's going to cut, raise, or do nothing.
All right, and we're only a few months from the start of hurricane season. How are you and your team updating the ETF's holdings to best benefit investors?
We really think this asset class is a strategic long-term asset class, and it's best invested in through diversification. So we're going to continue to stick to our guns and try to keep position sizes below 2%. And then we're also positioning the portfolio to sort of mimic the broader cat bond market. And what we mean by that is if there's 20% in Florida hurricane bonds in the marketplace, we'd like for our ETF to reflect 20%, but really the best of the best as far as security selection is concerned within that portfolio composition, right? So again, diversification is the name of the game. It's not quite the wild ride that people think it is. This isn't a sort of binary bet on weather outcomes necessarily. For example, 40 billion of LA wildfires, but there was only 250 million of cat bonds that were impacted by that. So despite the name, it really does take a large scale catastrophic event to start to impair these because they're really designed to protect against tail risk.
All right. Thank you, Ethan Powell, Principal and CIO of Brookmont Capital Management.
Thank you.
Coming up, WSense was at the recent Endeavor Week here in New York City, but the firm made news yesterday that it believes will take communication to the next level. We're going to have that story next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Italian startup WSense is on a mission to develop underwater Wi-Fi and recently made headlines with a new partnership on Monday. The company is collaborating with Fincantieri to co-develop wireless technologies for underwater applications and to apply them to environmental monitoring. WSense's chief executive, Chiara Petrioli, was in New York City for Endeavor Week and joined me to discuss the work her company is doing. Take a listen.
WSense is a deep tech company, so based on international patents, solving underwater connectivity. We are able to exchange data among whatever we have underwater, distributed sensors, drones, exploring and operating for us in an environment where we are not present, the underwater environment. 70% of our planet, which we know much less than faraway planets such as Mars, because we cannot use everything that is at the core of our economy. We cannot exchange data to traditional Wi-Fi. We cannot use remote sensing. We see through satellite only a few meters below the surface. So we really had to find a way to digitalize the blue economy to allow to get data and then being able to build intelligence and services in this environment. This is what we do in WSense, make this available to the world.
What are the use cases? I know you mentioned drones, but what are the use cases for underwater ocean connectivity? What can you do with it?
Think about the traditional way we exchange bits. Above water, not through internet. And now it's key because this, together with computational capability and AI, is changing our world. But when we transmit bits through the internet, 90% of this go through underwater telecom cable. So these are now prone to being attacked. There are threats to this. And basically, we don't have anything like video surveillance systems underwater to identify if there is a problem, potential risks for the underwater telecom cables or underwater infrastructures. So, for instance, we have developed resident monitoring system and underwater Internet of Things, where we reason on the data, we transmit real-time information such as threats, implementing this monitoring and protection of underwater critical infrastructure. We also are digitalizing, and we're part of the standardization body for this. In the energy field, for instance, in oil and gas fields, a network of drones are going to operate for us the plants underwater. And this is just an example. We also, with our underwater IoT, we are doing structural monitoring during construction in maritime environment. We are doing metocean monitoring, providing in real time unprecedented information from the ocean. We say that we give voice to the ocean.
How are you doing this? Like, are you working with third-party contractor? Like, how are you developing this technology? Is your company doing it? Is it proprietary technology?
This is actually a company that spin out of one of the leading universities, Sapienza University of Rome in Europe, where after being a Fulbrighter in the US, actually I've been full professor and lab director. We actually identify fundamental new ways of communicating in changing the reliability and performance underwater. So we have international patents on this, and based on this, we build novel subsea network infrastructure, like novel cellular network or novel Wi-Fi infrastructures. And this is now brought to NATO standardization committees, to energy sector standardization committees, and is becoming a new infrastructure connecting everything, supporting drone also localization. We don't have a GPS underwater, so we also enable an underwater GPS, and these drones have to work together, so they also need to be connecting with each other to do complex works at 1,000 meters depth under the sea surface. So these are, we really needed to change the way to enable this to do things, and we had to also use artificial intelligence in the way we adapt the way we transmit the information, because in underwater environment, think about even a passing by ships can impair the possibility to communicate.
How big is the underwater digitization market? How many companies are doing things like this?
We have been really pioneering this sector. So we are a deep tech in so-called blue ocean water, which for a company working underwater, it's a big challenge. But now after Nord Stream and after what happened in the underwater telecom world, where our telecom cables are being cut by novel generation, for instance, of drones or submarines, this is a market that is exploding. And also because in oil and gas platform, for instance, this new technology can significantly decrease the OPEX costs, and so there are reasons from the market. The market is estimated today being a 400 billion euro markets, so over $500 billion, and it's a fast growing. The market we are in, which are the innovative technologies for the ocean alone, is estimated $40 billion. So it's a novel market. For instance, the critical infrastructure protection market for the underwater domain is a completely new market that we are enabling. So we work in B2B as for a strategy to bring this technology global. We have leading companies that are invested to be the leaders of the new revolution, the new market. So in the different sector, we work with companies that are among the first 100 in the globe, and together with them, we are becoming a system, part of their system of system solutions to bring unprecedented capability of monitor, surveil, protect this environment. So this is the strategy with which we are scaling our company.
Thanks, Chiara Petrioli, for that interview. And Bible Chat, which the company says is designed to help its users around the world get through tough times, was also in New York this past December for Endeavor Week. Its founder and CEO, Laurentiu Balassa, shared more about how his app works. Check it out.
Always provide an answer that is derived from one Bible verse or a series of Bible verses. So users can be assured that they're always getting an answer, an AI answer that is derived of the scripture, from the scripture.
What is your primary user base?
US, people in the US. I think that's where our core audience is. And then we're a global company, so we have users all across the world.
All right. And what is your feedback from users?
People love it. I mean, if you look at the things that they're telling us, by the way, it's not us as the app, it's the Bible itself, but people love it. the feedback we're seeing is it helps them through difficult times, through anxieties, through those darker times in life. Yeah, if you look at our rating, I guess it's almost a perfect 5. So we're humbled by the feedback we're getting.
What is the user interface like? What is that experience like when somebody downloads the app?
We first ask a few questions about your current life circumstances, just to be able to provide, to understand your context and provide more help. And then you're presented with a daily plan. So it's a collection of things you would need to achieve on a daily basis in order to get closer to God. So you're studying, you're praying, you're reading or listening to devotionals, but these are highly contextual. These are created, constructed on the fly, real time, based on your own input. The first few steps that you've had in the app and in the onboarding itself.
Why did you decide to start this app?
I went through my own difficult phase in life back in 2019, and I came to my conclusion around what life is and what the purpose of life should be. And I believe minimizing human suffering is crucial, is the only thing worthwhile. And that's the company's mission. Fundamentally, we're trying to minimize sufferings for our users. And the best method to achieve that is through the Bible.
And when you went through your difficult period in 2019, did you turn to the Bible for help?
Well, I did a lot of soul searching, the Bible, religion. I did a lot of reading, philosophy, and I realized this fundamental truth that we all suffer this life, regardless of who you are, where you are, your social status, whatever. What binds us and unites us as humans is suffering. And we all experience this suffering in the same way. And so if you want to truly help, you need to tackle that and help people. And so, yeah, it was a journey of personal discovery, I would say, that ended up with me working in faith tech.
All right. And faith tech, that is a very crowded space.
It is.
There are a lot of faith-based apps. What makes your app different?
Well, by the way, when we launched, there were 5,500 Bible apps. Just for context, it's a very crowded space. When you come into a market, you're trying to create more value, right? And you're trying to innovate. So we were the first app in the world to provide this feature wherein you could actually converse with the Bible. So we were the first Bible app that offered personalized biblical answers for your specific, unique life circumstances. And so that was the differentiator ever since we entered this faith tech market. And since then, we've continuously innovated. I mean, we brought many new things to the faith tech world.
Thanks, Laurentiu Balassa, for that interview. And before we go, let's take one last look at the markets. Markets are in the green just under 30 minutes into today's session. The Dow Jones Industrial Average surging to a fresh intraday record at the beginning of today's session. Investors are also going to be paying close attention to fresh economic data arriving in the coming days. We're going to see the January jobs report on Wednesday ahead of market open. And then we're going to see that delayed January CPI report on Friday. You can catch us here weekdays at 9 a.m. We'll see you tomorrow.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?